All right. Good evening. Welcome to the SpaceX Bagholder podcast. How's everybody feeling? I personally am feeling amazing. Right now, this is actually the highest morale I've ever had as a SpaceX bag holder. And I guess primarily this comes from a lot of the math around the $100 billion ARR number that Elon quoted on the Q2 2026 earnings for the end of this year. A lot of that math has been validated. So we're going to be talking about that number, about whether 500 billion in 2027 is possible, and how SpaceX is going to finance it. So let's dive right in. Now, the $100 billion number at the end of 2026 for compute ARR, that's actually fairly easy to understand. It's actually just a simple multiplication of two numbers. One is the number of gigawatts of compute that SpaceX will have, and two is the pricing that SpaceX will get per gigawatt on that compute. Now, here are how the numbers break down for how much a gigawatt of compute gets you nowadays. When you're talking about the neo clouds, this is like your Nebius or your IREN or something, they get around $12 billion per gigawatt. The on-demand spot price for a B300 Blackwell Ultra, that's up to 29 billion. So that 12 billion number is for like the long-term stuff. The spot price is 29 billion. Now, SpaceX is monetizing at a rate much, much greater than these numbers. The Anthropic deal, which happened earlier in this year, monetizes at $31 billion per gigawatt. And the Google deal, which got done later this year, is actually at $48 billion per gigawatt. And as the year goes on, it's becoming clearer that the cost per compute is still going up, not only because the demand for compute exceeds the supply that's getting built out, but also because the mix shift of compute units that SpaceX is going to provide is going to go more towards Vera Rubin, which is the next generation after Blackwell Ultra. The newer generation Vera Rubin chips are more efficient and can produce more revenue on a per watt basis than the Blackwell. So it makes sense that the dollar per gigawatt number is going to go up. So really, to get 100 billion, all you need is 2 gigawatts at 50 billion per gigawatt. The 2 gigawatts is very achievable. I think SpaceX is going to end up with more than 2 gigawatts, and the $50 billion number is basically at where we are now. So it's looking very good for that $100 billion number. Now, again, the 2 gigawatts, all you need for the 2 gigawatts are Colossus 1 and expansions to Colossus 2. No new data center locations need to be even started or completed or anything in order for SpaceX to hit its 2026 number. It just needs to make continual progress on mini hard and macro harder, and that's pretty much it. So 2026 is really looking in the bag. Now, the big question is 2027, because in the earnings call, Elon put out a very ambitious $10 billion number here for the gigawatts. And a lot of people thought this was a joke. Even me initially, I budgeted something like 8 billion. I said additional 6.5. So I thought it was going to be around 8 gigawatts of total capacity in 2027. But recent analyses came out from Semi Analysis, and they are actually fairly confident that this 10 gigawatt number is very plausible. So let's walk through their document here and discuss why they think it's possible. So when it comes to building these things in 2027, there are three aspects that need to get checked off. One is the location. Like, does SpaceX have enough locations on the board in order to get to that 10 gigawatt number? Number two is the power in and of itself. Like, are there enough turbines to generate this power? And of course, number three is the money. This is going to require hundreds of billions of dollars of capex, and SpaceX only has around 100 billion in its bank right now. So how will SpaceX get the money? And we'll walk through this one by one. First, the locations. Now, in terms of locations available to build the data center, this is actually a much greater set than what you might imagine, because all SpaceX needs to get one of these up is a gas line. So SpaceX has demonstrated previously, again with Colossus 1 and Colossus 2, if it has access to a gas line, it can just spring up everything around it, the warehouse, all the cooling, all the other infrastructure rather quickly. So it's not like you need a pre-existing infrastructure location. You don't need a X Bitcoin miner facility or any of that. They have demonstrated twice now that they can just build one of these up from scratch as long as you have access to a gas line. So the number of available locations is actually quite large. When Semi Analysis was conducting their search They actually found that two warehouses that were very good candidates for retrofitting were already leaned against one of Elon's companies, MZX. These are located in Olive Branch, Mississippi, and additionally, it's already been discovered that electrical work was being conducted on these plants already, and both of these plants can provide upwards of one up to 2 gigawatts of compute. So that's already four. And also, Elon purchased a company called APR. They're sitting on top of a Pampa, Texas location. This is a site in Texas, and that site is also capable of producing an additional 2 gigawatts. So we're already good ways of the way there, and that's just like the ones that have already been publicly identified as having some relation to Elon Musk already. And again, these sites are already seeing activity in terms of construction and getting their electrical work done. So I'm fairly confident that a lot of this will get done in not Q1, but maybe H1 of next year. And then by that time, it should be clear what additional data centers that SpaceX intends to build for the second half of 2027. Now, of course, location is just the first part of the puzzle here when it comes to getting a data center up. Even if they have all the locations on top of the natural gas lines, which of course they will build on top of, that's how SpaceX builds their data centers. Even they have those locations, they need to buy the equipment, the gas turbines needed to convert that natural gas into electricity from which they will then power their GPU clusters. Now, again, this is an area in which I think SpaceX and especially Elon, through its relationship with Tesla, has a significant advantage in. Of course, Tesla is partly an energy company already, and Tesla's battery products, their mega packs, have been a very crucial part of how SpaceX powers and maintains power supply as Colossus 1 and Colossus 2 data centers. Now, you can imagine that they're going to be at the front of the line when it comes to procuring any of these mega packs, so that's not a concern. The main thing that we have to sort of keep our eye on is SpaceX's ability to procure the actual gas turbines to power these things up. Now, SemiAnalysis did their own research here, and they found around 7 gigawatts of undisclosed or unallocated turbines already sitting out there on the market. Additionally, they calculated that Elon already has roughly 9 to 10 gigawatts of turbines already on order or in operation across the fleet. So the equipment in terms of the gas turbines, that's all fully accounted for already in terms of getting the 10 gigawatts. What they're saying is the actual bottleneck is going to be the labor required to assemble and like construct the actual plant. And even on this front, SpaceX has made considerable progress, even just developing its own line of data centers. Like, for example, Colossus 2, the amount of workers they had to bring it up was around a third of that of their NeoCloud competitors, such as Crusoe. When it comes to asking the question of like how SpaceX is able to accomplish building these data centers with so many fewer workers and like man hours versus their NeoCloud competitors, often what's brought up is that it's likely SpaceX and Elon use pre-assembled Chinese modules. So this requires lower labor intensity versus doing things like the other neoclouds. This is another advantage of having Elon as your CEO, as like as somebody who's worked at both Tesla and SpaceX. Because, of course, Tesla has a very lengthy history in China. They have a huge factory in China, Tesla Shanghai. And with that comes, you must imagine, like a very large repertoire of knowledge when it comes to this Chinese supply chain and the electrical engineering components that might go into something like a data center. Like having been involved in China for this long, like it's easy for Elon to pick and choose, like, hey, we can save money here, we can save time here by picking these parts. So again, this is looking pretty good. And also the time to the completion in between each data center or expansion of Colossus 2, the times are shortening. Right now, they're doing their most ambitious thing yet, which is like the really small mini hard, which is the same amount of compute, for example. And this is getting constructed at a much quicker pace than all the other parts of Colossus 2, which are already up. So as long as they keep making iterative improvements to the process, you can imagine that the manpower problem will shrink over time. So that's the construction. So we went over location and construction. Now we can really talk about a fun or creative part of this whole assignment, and understanding how SpaceX is going to build out their data centers by talking about how they're going to finance these data centers. Now, again, just to recap here, I said this before, but SpaceX has $100 billion in the bank. In order to build out 10 gigawatts, they're going to need something like 300, $400 billion of capex. So how do you reconcile this? Where is SpaceX going to raise their money? The most important thing it is for you to understand when it comes to how SpaceX is going to raise the money is who is SpaceX's customer and how much money are they making. So, in order for it to be profitable for SpaceX, of course, you need customers and it needs to be profitable for the customer as well. In this case, the customers are the frontier model companies. So, we're talking about OpenAI and Anthropic and Google and so on and so forth. Now, the estimates for how much money a frontier model company can make serving their API right now are upwards of $100 per gigawatt. So again, SpaceX is selling, and we're all calculating a number based off of $50 per gigawatt. So even at $50 per gigawatt, it is still very profitable for a frontier model company to rent this from SpaceX, because they can turn around and then run inference on their models for over $100 per gigawatt, uh, giving them a 50% margin. Now they're used to 80 and 90% margins from their current partners, but like, you got to imagine that's going to go away, and that's where SpaceX is going to eat up some of it. But of course, they'll pay because this is all incremental revenue. So really, you just have to believe that the demand will still be there for these frontier model companies, and then if the demand is there, they're going to turn around and pay whoever has to compute. In this case, SpaceX. We're definitely going to talk about the demand bit later, but first, let's talk about the customers. SpaceX, of course, already has Anthropic as its primary customer for compute. It also has Google, which came on a bit later, and that's also a big part. It has Reflection and a few others. Now, you can imagine Anthropic's margin on their API is very high. Whether or not Google is going to remain a customer, that's very much an open question, because they're sort of dropping out of the frontier model race. Of course, recently their heads of DeepMind left the company, and they haven't released Gemini 3.5 Pro. Their current models are well away from the frontier. So it's likely that Google won't be competitive at the frontier margin. They won't have a competitive frontier model for quite some time, if ever. It's likely they might just give up. For example, Amazon does not have a frontier model at all. It just takes all its compute, its GPUs, its own ASIC, its own Trainium product, and turns around and sells them for a very high margin. Google, it looks like they're going in that direction as well. They're taking their TPUs, they're not using them internally, they're just selling them to their customers and trying to collect a fat check. That's certainly going to work for them in the short term, but then again, now they don't have a frontier model. So that's a bit of bad news for SpaceX, because like, Google was one of their anchor customers. You had Anthropic, you had Google. Of course, the other big player when it comes to frontier models is OpenAI. Now, this is where there's a bit of a problem, because Elon and Sam Altman do not get along, right? They fight all the time. There's a big lawsuit. These two dudes hate each other. Now, Elon happens to have an adversarial relationship to quite a number of people, it appears, in the valley and on the hill. But so like, how are we going to get around this? Now, there is a bit of good news. Like, it's highly unlikely that SpaceX and OpenAI come into any sort of agreement where one is selling to the other. Like, there's too much mistrust there. But luckily, there is a workaround for this, and that comes in the form of Microsoft. What we're hoping for is for Microsoft to sort of act as an intermediary between SpaceX and OpenAI. Because Microsoft and like, Elon can go and meet with Satya, who he's friendly with, and he can sell compute capacity to Microsoft, and then Microsoft can run inference on that compute, and the model that will be inferred will be OpenAI's model. This is a completely clean workaround. Microsoft earns a lot of money from this. Again, if you recall, Microsoft has an arrangement with OpenAI where all the models that OpenAI releases, Microsoft can sell inference on, and just keep all the money. They had this arrangement up until the 2030s. So it's very profitable for Microsoft to run any sort of OpenAI or like GPT based inference. So it's pure margin for them. So Microsoft will buy as much compute as there is demand. Uh, Microsoft is very much behind in their own data center creation. If you recall a few years ago, 2025, 2024, when they were in the lead, they actually decided not to go all in. They slowed down their data center construction. They slowed down their capex. Maybe they were scared of the financials or something, or maybe they weren't really AGI pilled, but it ended up in a situation where now they're behind on compute. So they really need to compute. They really need to monetize the remaining years they have left on this open AI contract situation. And I quite imagine they're going to be spending a lot of money on SpaceX. So with both Microsoft theoretically serving OpenAI LLMs on SpaceX compute and Anthropic buying compute directly, you've captured the top two frontier model companies. So you have those two as your anchor customers, and those will definitely provide you the $50 billion per gigawatt sort of price that we've been modeling throughout this time. Now, with 10, just imagine 10 gigawatts at the end of 2027 monetized at 50 billion per gigawatt, you're looking at a run rate from just the compute segment. We're not talking launch, we're not talking Starlink, we're just talking just compute of 500 billion, and these are highly profitable revenues as well. So like imagine the total sales, like even excluding Starlink, excluding launch at 500 billion ARR, if you just give it a 10x multiple, you're looking at 5 trillion. That's almost a triple. Like if you include Starlink, surely we're going to be looking at triple the valuation, so triple the stock price from here up until 2028, which is just in 2 years' time. So this is like really the reason I'm super bullish on this company. Now, having the frontier model companies as customers is one thing, but their ability to continue to buy from SpaceX is dependent on demand for their models. Now, like if we were 1 year ago or 2 years ago, you can pretty reliably estimate that like demand for compute will go up like tens, 20s, like just like infinite demand. But we are at the stage where like the amount of money being spent is already so high, we really have to actually question ourselves as to whether demand for these models can continue to go up. We have to recognize that demand at this scale is a risk and that we are betting on one side or the other. We are betting on the side that demand does continue to grow at really this exponential pace for at least another couple of years. Now, there's plenty of evidence that this is the case. For example, if you take a look at OpenRouter, OpenRouter is one of these model routing companies, or they sort of are like Google Vertex or AWS Bedrock, but they have a lot more models. They have basically every model, and you can take your you. It makes it very easy to code on whatever model you want. It's basically like Stripe for LLMs. Now, currently they publish very detailed statistics on how many tokens are being generated. For the week of August 3rd, 2026, the previous week, the total number of tokens generated numbered 69 trillion. So again, that's August, at the very beginning of August. Now, if you take a look at the very beginning of the year, January, in January 2026, the total number of tokens generated was 6.42 trillion. Because we're comparing the beginning of the year, 6.4 trillion, to currently we're at 69 trillion. So this is a 10x in half a year. That's like, no, of course you can't just say overall demand for tokens increased 10x. It could just be OpenRouter taking market share in terms of the model routing. But this is certainly a more bullish signal than anything. If you take a look at estimates for how much additional compute will come online in 2027 versus 2026, the current estimates are around, at the high end, a double. So they're estimating that the amount of compute available for inference in terms of gigawatts are going to double at the end of 2027 compared to 2026. And inference in just the beginning of this year grew 10x. Like at this rate, as long as inference demand grows quicker than supply, then it's just absolutely amazing for SpaceX. And I have no doubt, really, that that demand for these models are going to more than double over the course of a year. So if we've established the fact that there is going to be demand for the additional capacity that SpaceX is planning to bring online, there is going to be the customers, there is going to be the revenue. There still comes the problem of how SpaceX is going to get the money required to initially start and finish the construction of the data centers. Now, this is where I think it's pretty obvious. NVIDIA and SpaceX are going to partner. There's going to be vendor financing from NVIDIA. Like Elon in Q2 2026, he didn't just randomly go on the call and declare that NVIDIA has the best GPUs and we're going to be exclusive to NVIDIA at SpaceX. He did not do that just for the goodness out of his heart for like no reason, right? There's some sort of quid pro quo here. I think pretty clearly NVIDIA is going to front SpaceX, probably the GPUs. Now, NVIDIA did just announce a $500 billion fund for just this particular purpose. NVIDIA, Goldman Sachs, BlackRock, Blackstone, Brookfield, Apollo, and others, they're all ganging together to create a $500 billion sort of financing vehicle so that neoclouds, hyperscalers, and companies like SpaceX can buy their chips. Now, who is NVIDIA going to allocate their GPUs to? They're going to allocate this to whoever can plug them in. And if we think that SpaceX, as we do, will be the ones to be able to create the most new data centers, to be able to plug in the most GPUs, they will get their allocation of GPUs. Because the payback period that SpaceX has for their GPUs is so short. Again, like they buy a GPU and the payback period is less than a year. NVIDIA and all the financing backers behind this project can be rest assured that they will make their money back. Like they're going to have to front some amount of dollars, like to allow SpaceX to plug in the GPUs. And the first few dollars that SpaceX makes from those GPUs needs to go back into the financiers. And that's certainly going to happen within a year. And then it will be all profit for SpaceX. So I think that this is a near certainty. If you have a payback period of just over a year or just under a year, there's no doubt you will get the loan or the financing required to purchase the GPU. This is pretty much a slam dunk, I believe. Now, this is exactly the type of financing deal you'll hear all the AI bears around. You hear like Zitron and those type of people. They'll go around and they'll accuse NVIDIA of circular financing. That this is what it's about. But just understand like the negatives around the circular financing idea will be concentrated on the NVIDIA side of things and not the SpaceX side of things. SpaceX is the one that's going to benefit, and the financing risk belongs on NVIDIA side. Now, I do think NVIDIA is going to make a ton of money from this because the risk, like, I'm not really valuing the risk here because I don't think there's very much risk. Again, with the payback period of 1 year, is SpaceX going to go bankrupt and not going to be able to pay you back? I don't think so. I think this is going to be very profitable for SpaceX, so they will be able to pay NVIDIA back. And with the financing in place, there's really nothing stopping SpaceX from executing on its plan. Again, $500 billion, which is the size of the fund that NVIDIA is raising, is enough to give for SpaceX to complete their plans. They don't, of course, they're not going to get all of it. They just need to get a sizable portion of it, even half of it, and like they have all the money they need. So this is looking really good. Like we honestly, again, I said this previously, but we could honestly be looking at $500 billion ARR. This is even supposing the price of compute doesn't increase further. There is room on the upside, but again, 500 billion just from compute. You add Starlink to it, and I think we can easily see 6 trillion in valuation by 2028. Right now, SpaceX is sitting at $138 for a market cap of 1.83 trillion. So I think in 2 years this will go up to 450. So really, I'm feeling it's hard to feel better as a shareholder than me right now or us right now as SpaceX shareholders looking this data in the face and like seeing how capable SpaceX is at executing it. So that's pretty much it for now. Again, this is just the compute segment, not including Starlink. So like just imagine the additional upside. And yeah, that's pretty much it for us in this episode. I've been your host, Smelly Fingernail. My current position is 1,546 shares for a weighted average of $208.65. I am the world's biggest bag holder, but given what we learned today, I really don't think this will be a negative bag hold for much longer. Soon, by the end of the year, we will be back above my weighted average. All right, I'll see you next time.